welcome to this edition of Closing Trades right here on 80 now. And a surprise turnaround actually in the markets. I mean, not to say that we're out of the woods or the volatility has abated, but a lot of jagged edges, started off in the green, dipped all the way in the red, and then again you've seen a recovery after many dips getting bought and peaks getting sold into, finally settling in around the 22,120 level. Having said that, it seems like conclusively life's up 22,200 now, because today we really broke the neck off that level. Reliance, and I guess that would be the key culprit today, because that stock at the low point of the day was down nearly about 3.5% on the futures. Right now, even though it's resurrected a tad bit from the session lows, but still down 2.5%. Along with that, HDFC Bank, IndusInd Bank, these are all the laggards in trade. HDFC Bank as well, lower by about 1.5%. IndusInd Bank, of course, was much lower earlier in the day. It was down about almost 4%. From there, it's seen a meaningful recovery. But still, that's the weekend of the market. Axis Bank, Unilever, Tata Consumer. So these large cap names are the ones which are still seeing pressure. What's springing up though, and what's managed to, pull the market up definitely has been some of the technology names. They were strong from the word go. Bharti is looking very strong at that 1.5% gain mark. And then L&T has been holding up 1.25% as well in trade. M&M also, after its monthly sales data, has been going strong. Net result, at least within the F&O segment, the breath has actually managed to change hands, and it's the advances which are taking over with a count of about 146. Supreme Industries, Prestige, REC, Voltas, BEL, interesting names out there.
Well, yes, of course, Aisha, very great recovery from the day's lowest point. But the key to note actually is that all of these beaten down sectors specifically are seeing a good rebound. But the big question definitely lies ahead, that how much you can trust this particular rebound. But just to highlight some of them, these cap good companies from the likes of ABB, Siemens, they are having a good day today. Stocks like Varun Beverages, which were down about 20 to 30% off late, especially in the last week, they are having a good rebound. And some of these defense counters and railway counters, the one pocket which was definitely left behind and nobody was actually looking into those counters are actually having a gain of 3 to 5% in today's trading session. And well, of course, within the Nifty 50, it's BEL which is taking the lead from the defense pack. So that's the construct of the market right now. But definitely the big question lies there, is the short-term bottom in place? And if yes, then how much you can trust this? So let's connect with our experts then and try to find an answer to that. We are being joined by Kunal Bothra, Mayuresh Joshi, as well as Naresh Mirani is on the show with us. A very good afternoon, gentlemen. And Kunal, help us with your first take on this recovery that we have witnessed today on index.
Yeah, I think it's been a decent recovery for the index from the intraday lows. Of course, the first half an hour, first 1 hour, we'd seen more of sell-off across mid caps and small caps. Where at one point of time, and even a few large cap names, the heavyweight names, for example, like Reliance and HDFC Bank. But I think now in the second half, we've seen a very good recovery across mid caps and small caps. And also on the charts, I think what's interesting on the Nifty front specifically is we've seen a breakout on one of the indicators on the hourly charts, and that has happened after almost like 1 month of the index trading into a downtrend. So I think more or less around 10th or 11th of February is where we'd seen the downward signal for the index. From there, we'd seen the index correcting from 23,750 mark. Those indicators have started to reverse on the positive side for the indices, which means that what we are seeing as a recovery on an intraday basis, I think should see a follow-through up move. So I would probably be of the belief that maybe a short-term bottom could be at place, and from here on we could be looking at least another 150 to 200 points on the upside.
Okay, that's the take coming in on the index. Let me welcome on board Naresh as well. Naresh, good recovery actually within the broader markets. What is it that you're making of, the texture of names? You've got a Voltas, REC, Prestige. Does it seem like this is genuine buying?
So it's a decent buying on the small cap side more. The mid cap has also recovered well. But names which have, say something like Voltas had already been recovering for the last few sessions. But we are seeing many stocks which are in a one-way downdrift today have given reversal signals, at least on an intraday basis. So now we watch out for what is the action by FIs going forward. 22,300 on a price point on the Nifty spot, and maybe any short covering seen on FI derivative numbers would be an indication of reversal. For now, looks like 22K is holding on for a few sessions.
Right, so that's the take on the broader markets. But Naresh, help us with your take on the sectors which will participate on the very first go in this sort of a recovery, if you really have some confidence in that, because For today, yes, of course, the benchmark indices have recovered, but all these stocks, especially from the broader end of the market, Mayuresh, I beg your pardon, I wanted to have your take on this one, that these stocks within the broader basket have corrected around 30 to 40%. Anything that is standing out for you at this point in time, which can actually participate from the forefront in this sort of a recovery?
Good afternoon, Shrishti. No, the own sense is that it's going to be very, very selective as far as the broader markets are concerned. And you're absolutely right. I think if you probably track the NSE 500 companies, after 2015, the COVID crash and 2022's crash as well, only 10% of the stocks are trading above the 200-day simple moving average. And therefore, I think if you're probably looking at a large part of the broader markets being butchered, I think that's the right way to probably put it. How will earnings play out? Going to be extremely interesting for the broader markets, but specific pockets like agrochemical stroke, rural themes is something that are throwing up in our sector rotation software pan rail. We've also probably got hospital stocks which are coming up where the earnings have been pretty reasonable so far. And therefore, I think expectations in terms of earnings will bring up. But for a large part of this pool, whether it's agrochemical companies, some select fertilizer companies, you've seen tractor makers post decent numbers as far as the February or the January sales are concerned as well. And therefore, rural themes should come back. Hospitals as a space should continue doing well. And among the mega themes, my own sense is that banks selectively should continue doing well. Again, historically, what we've probably seen that after such a huge lull and a correction and a downfall in the markets that we probably got, the next rally that comes through and the sector that leads the rally, it might be a totally different stock leading the rally as far as banks are concerned. And therefore, I think we've got our eyes focused on Kotak Bank, particularly within the large cap names, where our belief is the numbers in Q3 have been reasonably better. The expectation in terms of slippages might continue in Q4, specifically on the microfinance book, which is only 8,000 odd crores of the total book of Kotak Bank. But that should largely get compensated in terms of asset quality pressures coming off in the retail book, cost to income ratios remaining stable. NIMs have remained extremely stable at 4.93 odd percent. And therefore, with the addition of the Standard Chartered book as well, the expectations in terms of some element of clawing back of CASA, along with improvement in NIMs as well, along with moderation in overall slippages and cost to income ratios, should augur well for return ratios. So I think banks selectively might do well. We are keeping our eyes closely on Kotak Bank within the larger names.
Right. Okay, let's try and understand why exactly the CapEx theme is under focus once again. And in view of assessing the CapEx utilization in various ministries, the central government has reviewed the status of key infrastructure projects in ministries such as railways, power, transport, etc. According to sources, 75% of the targeted FY25 CapEx has already been achieved. Prakash, my colleague, is here with more details on the same.
Yes, sir. We are learning from our sources that the government has reviewed the status of key infrastructure projects in the country. Infrastructure projects of ministries such as railways, road transport and highways, telecom, power, coal and housing ministries have been reviewed. More than 1,700 key infrastructure projects comes under central sector have been reviewed by the government. And this is, a first such assessment in the year 2025. And the most important part is that the capital expenditure has reached 75% so far by Jan 2025. It's a very significant development coming in, and this is against the revised estimate of 10.18 lakh crore for the financial year 2025. Along with that, the ministries have been told to achieve 100% capital expenditure target for the financial year 2025. As you are aware, that the capital expenditure was little slower during current financial year due to Lok Sabha elections. But after that, it gained momentum and we have seen relatively higher spending during the second half of the current financial year. In addition to that, the government has also released rupees 1.15 lakh crore interest-free loans to the estates as against a revised estimate of rupees 1.25 lakh crore. So some positive development when it comes to capital expenditure target. And the government is also hopeful to achieve rupees 11.21 lakh crore capital expenditure target set for the financial year 2026.
All right, Prakash, thank you so much for getting us all those details. So 75% of FY25 target related to capex has been met, and all eyes on the next target of 11.21 lakh crores for FY26. But with this, viewers, it's now time to flip into a very short break. Don't go anywhere. We'll be right back. Welcome back to Closing Trades, and taking a look at the markets. A good recovery underway, but select pockets are definitely doing well, and one such space is the hospital space, because within the broader markets you'll see Narayana Health, that stock is higher, up around 10% in trade right now. And what I see is stocks like Max Healthcare and Apollo Hospitals from the FNO basket are doing pretty well for themselves. But Kunal, anything that you are spotting at this point in time? Because Narayana Health, I believe that has been a different case altogether. But from these beaten down names like Apollo Hospitals, Max Healthcare, any opportunity here?
So Narayana Healthcare at current levels of 1623 plus, I would not be too keen to buy, because the stock at current level is crossed above the 3 sigma Bollinger bands on the upside. So 1596 approximately is where the band is, and the stock is trading at 1620 plus levels. So which means at current levels, I would actually believe that this could be a good time where short-term traders could look at profit booking into this name.
Okay, just look at some of the other names and look at what's happening within REC and PFC. Of course, these stocks are on a tear. CLSA, remember, came out with a note on both these counters, REC and PFC, wherein they've upgraded them to a high perform now from the earlier to outperform that is. And the target price as well has... though that has been altered, and that's been brought down a little bit after the recent correction in the market to 525 on PFC, and for REC from the earlier 590, it's been brought down to 525. Bajaj Auto, of course, has been a strong one. Their total sales have seen an uptick of about 2%, and remember, these numbers came out just this morning. They stand at about 3.52 lakh units, and for Ola Electrics, they're set to cut more than 1,000 jobs to try and stem their losses. That's what the news agencies seem to be reporting. And that weakness, of course, is being felt on Ola, which is currently down by about almost 3%. Having said that, what's peculiar about today, Kunal, is the selling in the private banking names. Kotak and HDFC, IndusInd Bank, Axis, all of them under pressure. What's that telling you?
Yeah, it tells you that maybe the residual selling which was there into these stocks, which was spending into these stocks, that's happened. Now I believe that there could be a change of texture across the the larger cap names also. And for example, today you've seen Kotak Bank, Axis Bank being a lot more resilient when you look at this on a net basis as compared to stocks like HDFC Bank, which have been on the receiving end. When you look at the price performance throughout the day. And this is just to almost exactly negate what happened on Friday, when HDFC Bank was absolutely flat and was more sideways and positive throughout the entire day, when the markets were seeing a heavy selling pressure. So I think that in that kind of a negation generally happens on an immediate basis, and that happens once the market expects these large cap stocks on an immediate basis to get into a recovery. But then there comes a stage where these stocks disappoint for a couple of days, and then these stocks, they pick up price action yet again. So I think out of the two large cap names, for example, specifically Reliance and HDFC Bank, I would actually believe that HDFC Bank at 2%, 3% down where it's trading right now could actually be considered as good contra bet, because there would come a time when many of these private sector banking stocks would require the more formidable stocks to outperform. And I think in that context, HDFC Bank can stand to outperform from here on.
All right, that's the take coming in on the banking space. But just a while back, there was a news flashing on the bottom of your screen with respect to IRCTC, wherein the government has upgraded IRCTC to Navratna status now. And that's the news flash coming in on this counter. But Mahesh, though this is just to make into the headlines, but talk to us about the business prospects for IRCTC, because the whole travel and tourism theme is buzzing off late. And IRCTC, well, of course, we all know about the moats lying there, but how do you see the growth of IRCTC in terms of the financials, and do you believe that there's an opportunity for an investor to go ahead and chip in some money here after the recent correction?
You're absolutely right, Shrishti. I think the big picture argument always has been in favor of IRCTC. I think it is one of the biggest ticketing players in the country. More Vande Bharat trains have been introduced, a lot more expected in the pipeline as well. Railway stations have got renovated. You're probably looking at railway lines, which are probably getting refurbished as we speak. Safety mechanisms being put in place. Therefore, a lot of tailwinds happening for the entire sector as well, and a decent allocation that has happened through the budget as well. Being one of the leaders as far as the ticketing platform is concerned, what they've also forayed into in terms of rail need, as an example. There again, I think the margins have been pretty decent as well. But they've been lagging in numbers very, very earnestly. And therefore, I think the kind of performance it has been an indicator in terms of how their financial performance has been, which probably has been on the downside. Now, again, I think the next few quarters, there is some element of hope that numbers should start improving. You've probably seen this quarter where the boom has happened. I think a large element of train travel has probably happened across the length and breadth of the country. As we head into Q4 and Q1, and as summer vacations will be around the corner, you will probably also assume and expect a large part of the ticket booking, which is the heavy lifting that IRCTC does in Q1 and Q3, when the holidays normally coincide, to probably be the best quarters in terms of the reporting numbers. But a large part of their business elements, the hope now is that a large part of their earnings underperformance is largely behind us. As we are seeing a large part of rural recovery take place, there is expectation and hope that earnings might have bottomed out for IRCTC. And the best quarter, which is to come in this quarter and the next quarter, I think the numbers will be relatively better enough to probably re-warrant or warrant back some element of an earnings revision or re-rating for the stock. So yeah, I think hoping that, and the hope is that the numbers will come through, hoping numbers will come through positively, reflecting positively in terms of the funds.
But Mayuresh, do you not believe that to cash in on this entire travel and tourism industry, the best way is still hotels or maybe aviation?
So Aisha, again, both. Largely, I think aviation will continue doing well. Again, I think the same logic probably applies to a large part of the travelers for home, and same logic for IRCTC. I think the best quarter will come in the coming quarter when the summer vacations coincide. Again, I think what you're probably looking for aviation stocks, crude has probably remained far more stable, and therefore 45% of their input cost is the aviation turbine fuel, which remains constant. Obviously, the currency is depreciation, so a large part of the benefits that come through with stable crude probably get offset with a depreciating rupee. But to a large extent, I think the new fleet additions that are going to happen for Air India, for Vistara, or for the other players as well, is still going to take time. And therefore, I think Indigo might continue its share in terms of both the leadership position that it has in the skies, as well as the load factors, and therefore the margin performance as well. But hotels as a space, in my opinion, Aisha, should continue doing well. Obviously, I think with this entire theme coming back in focus, hotels and hospitality should continue largely doing well on the premise of average room rates being relatively higher, expectations of ARRs being maintained or going even higher in the next couple of quarters probably is a given at this point of time. A large part of the hotel universe is adopting an asset-light model. If you see Lemon Tree, Chalet, if you're seeing Indian hotels to a large extent as well, or even the smaller players, I think there is sufficient amount of growth that will come through with not much of leverage adding onto the balance sheet, and asset-light model ensures that the dynamics in terms of top-line growth, margin performance continues as far as balance sheet is concerned. And then for hotels as a space to continue with this team, selectively looks good as well. So Indian hotels, as an example, might continue doing well, even if valuations are a little bit.
All right, Mayuresh, with this, we'll let you go on that. Really appreciate you taking the time out and speaking with us. But in the meanwhile, let's also try and find out some of the trading bets. And Kunal, you go first. Help us with your closing trade ideas.
So I'll go with the BAN NTPC. That's a chart which is looking a lot more stable. I think at current levels of 310, 312 on the spot basis, would look out for a near-term upside of at least 3 to 5% kind of a swing return over the very short term.
All right, that's a buy coming in on NTPC. So let's watch out for that. But Naresh, what about you?
So that would be about L&T Finance. The stock has made three bottoms around this 130 to 135 mark. And today also trying to make a comeback. So expecting some follow-up action here towards 145 to 150. Stop loss to be kept at 135.
All right, so let's watch out for L&T Finance as well as NTPC. So two buy calls coming in from our experts. But with this fears, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back.
Well, some stability seems to have kicked in, definitely. I don't know if you're going to sustain this or not, but at least on the futures, you're holding above, or well above, I should say, right now, for that 22,250 level in trade. 22,200 still being clung on to for even the spot Nifty, and better a day actually for the broader markets, where you've got names like Supreme Industries, TI India, Prestige, REC, Siemens. These are all the names which are actually holding on. But we had Chris Wood from Jefferies join in earlier today to talk about how the world has been, where India is positioned, what is it that you should be doing with your portfolio right now, and what could turn out to be a good short as well as long and medium term buy or top idea according to him.
The sentiment on the property market is horrible. People say the property cycle is over. They say the stock market correction will be very negative for real estate. I mean, that may be true in the short term, but personally, I do not believe the property cycle is over. I think a straightforward story to invest in India, it was already straightforward, remains straightforward, is anything to do with travel. But in terms of how the fund managers locally are positioning, people have been, the budget this year, I think, has been quite significant in driving market sentiment. Clearly, the budget has had the effect of causing domestic portfolios to move away from domestic investment proxies more to discretionary consumer stocks. That's the current sentiment in the market.
In terms of renewable, I do think that's a very, very long-term, powerful theme which is still running. Valuations in some cases are not sustainable, but the theme itself is very, very powerful. That we will have to invest a lot more into our own energy security, and whether it's wind or it's solar or it's nuclear, anyone who's playing into that, including the transmission players, there's very, very long room, for years ahead. For money to be made over there. I would just, watch out for valuation, because again, like people take the 10-year story and then they pay up for the 10th year, immediately. That's really what one has to be cautious against.
3 to 5 years, I think even companies in quick commerce will do well.
Okay.
The second is in hospitals. Some of the hospitals can grow at that price. Pharma, I don't know, because pharma, it will totally depend on how fast our per capita income moves. If it moves from $2,500 to $5,000 in the next 5 years, there is a possibility that in pharma also you will, because Indian pharmaceutical growth, frankly, if you see, lags quite a bit. Anywhere between 8%, 10%, sometimes even 6%. So that needs to grow first. The market needs to grow, and that is where I think the opportunity lies.
All right, so those are the big themes that we can watch out for at this point in time. But back to the markets then, and let's also welcome Chakri Lokpriya on the show right now. Hi Chakri, good to be speaking with you. Chakri, first up, help us with your take on the defense pack, because in this market rebound, we are seeing a lot of these stocks participating. And globally, of course, Chakri, what we are getting to hear is that European markets are definitely looking to up their game with respect to defense spending. Within the Indian markets, there are some of these stocks which, and some of these companies rather, which have exposure to the European markets, case in point being BEL, which is one of the top gainers. But help us with your understanding on the defense pack after the correction. Any opportunity that you're spotting?
Good afternoon. Thanks for having me. If you look at the defense pack, basically they've all corrected a good 40-50% on the back of lower Indian government spending, and there was some amount of re-rating downwards of earnings expectations for the stocks. Now then, fast forward into a few months later, now the world is a slightly different place, with the NATO itself is in a major flux, and therefore that's leading to a number of individual European countries increasing their GDP percentage of GDP budget on defense. UK is a case in point, and that will be followed by other countries. Now that is good news for Indian defense companies exporting, which is Bharat Electronics, Hindustan Aeronautics, and a few other companies, and therefore, their valuations have corrected. I think the long-term growth will kind of show a little bit of revision upwards as a result, and therefore, yes, we could buy into Bharat Electronics and Hindustan Aeronautics.
Chakri, what explains the selling today in Reliance? I know, I mean, I'm getting very sort of myopic here, but it's a mammoth fall of 3% that one is seeing today. Or is it just smacking of further FII selling?
You're right, Aisha. I think it being the largest, one of the largest companies in the country and a big holding of all the FIIs. And so that's where the brunt of the selling is coming from, I would guess. Fundamentally, the company is very strong. Yes, oil and gas businesses at a cyclical kind of an uncertainty, telecom and retail. Telecom is okay, but retail is still weak. And new energy business is going through a major change, with Trump coming to power and a defocus on new energy. So given all this, the sum of the parts of the stock should take it much higher. But this is once the FII subsides, which I think is still probably some time away.
Let's watch out for Reliance, but within the auto pack, let's put the spotlight on the two-wheeler segment because, well, of course, when we see today, Bajaj Auto as well as TVS Motors, both the numbers were actually in line to what the street was expecting in. But on one side, where TVS Motors is up around 4%, Bajaj Auto is down about 2.5%. But the selling pressure on Bajaj Auto, Kunal, is really not stopping because look at the stock price from those levels of over 12,000 levels. The stock is almost half now. When is this selling pressure expected to finally settle in?
Well, difficult to say when it's going to settle in, but I think it should be very soon because the stock has gone through almost 7 consecutive months of selling and it's halved almost from 12,700. I think that was the high for Bajaj Auto towards the current level of 7,700. So it's a very sharp correction, and that too for a formidable large cap name, a Nifty 50 stock. In that particular sense, and I think the last 6-7 months we've seen two stocks which have from the same space which have been treated in this kind of a manner. One of course is Bajaj Auto and the other is Tata Motors, and in fact the third one being Hero MotoCorp, and I think all three of them have gone through a very sharp sell-off. So I'm expecting that whenever the stocks get back into a bounce, it could not be one out of the three names which should bounce back, but it should be all three of the stocks which should bounce back. So, but I believe now at current levels, the probability is very much on the higher side that these stocks would eventually go into at least a 10 to 15% kind of a bounce back, if not more, from current levels.
Okay, that's the take coming in on the entire two-wheeler pack and of course Bajaj Auto in specific. But cement major Ultratech has continued to be in the top headlines. Let's get you the key takeaways from the management commentary on where they see their newest foray, that's cables and wires segment, headed in terms of returns. Ashesha is here with the details.
Well, yes, some important management commentary coming in with respect to the wires and cables foray that the company had announced last week, where they believe that there is enough room for the entire industry, that is the existing players as well as new entrants like Ultratech Cement, to grow. They've also spoken about the return on equity profile going forward. They're very bullish with respect to the outlook going forward. They say that the plant will be live by December 2026. It will help the company generate return on capital of about 20%, return on equity IRR of about 25%, and the company also says that they will be able to achieve EBITDA margin profile which will be in line with the peers and the players that are currently operating in the industry. As far as the capex is concerned, it will entail an outlay of about 2,000 crores initially, but the company also clarified that they will not be entering into any new or additional businesses unless they find it very lucrative, but the initial outlay will be 2,000 crores unless they expand going forward into other businesses. Existing cement business also continues to perform very well. Their outlook for the cement business and their expansion plans are on track. They are looking to increase their capacity to 209 MTPA by FY27. So there is no harm whatsoever as far as their existing business is concerned, and their outlook and the financial profile of the wires and cables business also continues to remain very solid. Now, CLSA has come out with a report where they've upgraded the stock to an outperform rating with a revised target price of 12,700 rupees per share, where they believe that most of the negatives have already been priced in. Remember, last week when the wires and cables foray was announced, the stock had tanked a tad bit, and they believe that the worst is behind us. Concerns have all been priced in, and they believe that the risk reward at this juncture looks very attractive, with concerns of diversification to wires and cables business as well as the profitability most likely priced in. So very positive report that has come in from CLSA with respect to the risk reward, and also on the back of management clarification that has come in, the stock is gaining in trade today in an otherwise weak market.
All right, thank you so much, Ashesha, for getting us all those details. But Chakri, help us with your take on not just Ultratech, but the whole cement pack, because there are a couple of reports highlighting that in the month gone by, there were no significant price hikes being taken. But in the month of March itself, there are hopes that the whole industry can actually see decent price hikes. But the key to note will be that, yes, this will be a financial year end, so some impact because of that. And whether they sustain it or not, that is something that we will be watching out for as well. But what's your sense on the cement pack, Chakri, and any particular play that looks attractive to you?
Ultratech and Ambuja and ACC are the clear market leaders in a game which has become, which is volume led by Ultratech and ACC. Against that environment, the volumes are likely to go up, given that economically India is still in a weak spot and will improve going out. Second, pricing has not increased for the whole sector, and now we're beginning to see some amount of price increases, and that again will be led by Ultratech and Ambuja. So because given that the price increases have been below inflation rise over the last couple of years, I think there is enough room for them to increase prices. Now, third, in terms of their foray into wires and cables, now if you look at Ultratech, under the same roof of their distributor, they would sell cement, they would sell paint, and they would sell wires and cables, all belonging to the same construction segment. So the influences are the same. The guys who buy cement are the guys who buy wires and cables, and Ultratech, having a very strong brand name and presence and distributor reach, I think would be able to take market share very quickly, and therefore it will be accretive to Ultratech earnings over time, and therefore it's a good thing.
Right, okay, that's the take coming in on Ultratech. But what about, those beaten down names from within the wires and cable segment? What's happening with Polycab? What's KEI up to? Are they seeing any recovery or not? That's also going to be something meaningful to really look out for. And I think there was a Jefferies note on Polycab as well, wherein they actually say that they're maintaining their buy with the target price of 64.85 from the earlier 7,700, and they're saying that they foresee no impact because of Ultratech's cable and wire foray to at least 2027. And some of these names have actually seen a recovery come by. But Chakri, what about the wire and cable segment? I mean, do you buy into the Polycabs, RR Cable, KEIs, etc. after the one-day correction that happened?
If we went back into a couple of 2 or 3 years, this is what happened to the paint industry with Asian Paints and all the other paint companies. Once you had the new paint companies come in and announce big plans. And I think, it's the same thing repeating all over again. See, end of the day, these are all largely commodity businesses. Yes, there is a certain amount of branding. But in the case of, Ultratech, it has strong backward and forward integration. It goes and buys some of its copper from Hindalco, and then it goes and sells the product from the same distributor channel. So I think the margins for this industry with new competition coming in is likely to come down a little bit. Therefore, yes, indeed, the existing players are likely to see lower margins and therefore lower valuation multiples going forward.
All right, so let's watch out for these counters, but let's also eye some of these brokerage-related stocks as well, because just on Friday we did highlight what Zerodha founder has tweeted on terms of the shrinkage in the volumes, and maybe taking cues from that. Stocks like Angel One, etc., are having a sharp knock in today's trading session. But specifically on Angel One, Kunal, if you can help us with your chart check, because there has been a significant decline on this particular stock. Where do you see the stock headed?
Yeah, it's managed to break below major support, and that was the support over the last 1.5 years for Angel One, just around the 2000 mark. I think 2010-12 were the spot levels, was the major support for the stock. It's managed to break below those levels. What matters over here now is that if we see any kind of a reversal on the upside, so the stock manages to come back about the 2010 odd mark, say by a margin of couple of percentage points, then we can expect that the stock may get into a recovery phase. So as of now, the view would remain on the slight negative side for Angel One, unless the stock, say over the next couple of days, if the market gets into a bounce back mode, also comes back and trades about the 2010 plus mark.
Okay, let's get in some BTST trades as well going before we wind up for the day. Naresh, what's on your list today?
So first would be a buy on L&T Finance, holding on to the 130.35 mark. Stop loss at 135, target price of 142. Second is a buy on Tata Motors, just been in a one-way drift. Looks like a reversal in play for a short-term trade. Stop loss at 618, target price of 640.
Kunal, what about your BTST ideas?
I'll go with the BAN NTPC. That's a chart which has been looking attractive, and I think especially at 310 plus mark, the risk reward would be a slight bit more favorable. Would look out for targets in the range of at least 328 for NTPC, stop us at 305. In L&T France, I would be bullish on from a short term perspective. Triple bottom around the 130, 135 kind of a zone. So would look out for targets in the range of 142 at least. Its stop loss could be now trailed to 135.
All right, so all the buy calls rather coming in from our experts, and good to see that after a long time we are seeing a buy call coming in on Tata Motors. So let's watch out for that. Definitely one of those beaten down names. But well, of course, today a good rebound within the metal pack as well. But Chakri, help us with your take. How do you see the metal pack? Because a lot of these news flows related to what's happening globally does impact the commodities and the stock prices back home. But help us with your take on the metal pack, the kind of rebound we are seeing today. Can one trust on this particular basket?
Metals, as we all know, is globally linked to fortunes. And therefore, with the kind of uncertainty out there globally, as well as some weakness in China, therefore, the volumes are unlikely to meaningfully pick up much more. But on the other hand, pricing is hardly existent for any of the metal companies. Third, but the valuations are very fair. But given that there's no catalyst for the earnings to improve from the current levels, I would stay away on the sidelines and not really buy into any of the metal names. On the other hand, things like financials, which are all more domestically linked, maybe there, yes.
Financials and not metals is the call coming in. But Chakri, within financials, what is that something looking attractive to you right now? Because yes, financials is coming in as a consensus call from the experts, but help us with your take and any stocks that are looking the most attractive to you right now.
The fall in financials has come about due to, let's say, the slowdown in corporate spending, slowdown in consumer spending, slowdown in government spending. Now, of the three things, after the income tax cut that's happened for the consumers, so an urban consumer will marginally recover a little bit. Corporate capex, is waiting for some interest rate cuts, and I think another at least 2 or 3 rate cuts would happen in the next few months, and then private capex would also kind of pick up. So against the backdrop, I think still we would go into first the PSU banks, SBI, Canara Bank, and then we would go into the large private banks like ICICI and Axis.
Go on for the larger ones. In the meantime, Ola Electric is coming out with some statements talking about the layoff report, saying that they have restructured, automated the front-end operations, and they're eliminating redundant roles. This, of course, is in clarification with the fact that they had given the red card to almost 1,000 employees which had been laid off. So that's that on Ola Electric, some clarification coming in there. And, the news agencies have reported that this was a move which was done to stem losses, and pretty much along the similar lines is what they're reporting as well. Still 3.25% lower for Ola Electric. Haven't seen any improvement in that stock. What's happening with the rest of the market? While we're closing in okay, definitely off from the lows of the day, but so from the highs as well. We're closing in absolutely flat around that 22,250 odd level. Better a day for the broader end of the market. Names like Eicher, BEL, JSW Steel, Ultratech Cement and Trent are the ones which have seen some buying kick in. And that's pretty much the case within Apollo Hospitals, Bharti. Some of the technology names as well have also sprung up. But that's not the case with the Reliance, not the case with the Coal India, Maruti, and of course the private banking names like HDFC as well as Axis. Asian Paints as well continues to reel under pressure. Chakri, what's the take on IT? Because the consensus seems to be avoid and steer clear till you know not just what the impact of AI is on IT services companies, but also which way tariffs and Trump's policies, etc., are going to go with regards to visa and immigration laws.
Most of the Indian IT companies have actually kind of increased their hiring onshore and in the US. And, so today they are far better placed than they were a few years ago. Second, it's not that offshoring is going to go away. Third is IT, all the Indian IT companies have actually branched into, and they have product offerings. So against all this backdrop, I think the earnings are largely intact given the potential threat of tariffs, which we'll know in probably week or so. I think it's March 4th. But given that, I think net, I think at worst, you'll probably be neutral, but IT as a sector, I think, if anything, has the most earnings momentum going in amongst other sectors.
All right, that's the take coming in on IT space, but let's also watch out for pharma because that is one particular spot, at least for today, has been holding well. Nifty Pharma is trying to end the day at the highest point for itself, and a lot of these stocks within the F&O basket, stocks like Lupin, Apollo Hospitals within the healthcare space, Granules India, these are doing pretty well for themselves today. Naresh, any particular stock that is standing out for you within the F&O space from the pharma pack?
Looking out for Dr. Reddy's, which has seen a large correction from 1400 to 1100 in the last 2 months. And say 1000, 1100 was the starting point for the move almost a year back. So that could be a stock which could bounce back from the zones towards 1220, 1250 levels.
Right, let's watch out for Dr. Reddy's. For now, the stock is almost trading flat, but Naresh is looking out for a bounce back in this one. But other than that, Glenmark Pharma is also one of the top gainers, and so is Abbott India within the F&O basket. What is not doing well, or not rather trying to end the day in the green for itself within the F&O basket, what we see is that Reliance Industries, well, of course, is down over 2% right now. And other than that, stocks like BSC, IREDA, some of these newly entrants within the F&O basket are ending the day with sharper cuts. But Coal India is another stock which is down about 2.5%. Just last week, we had that announcement related to surprise hike of FSA, but seems like the steam is just lost. And Kunal, if you can help us with your take on Coal India, a bit of a rebound in this one, but how do you read into?
Yeah, I think a couple of days back there was a rebound for Coal India from 355. The stock moved up to almost 375 in a matter of couple of days. Today the stock has given back those gains, and it's come back to that 355, 360 kind of a mark. But I think at current levels, when looking at especially the yesterday's volume, I would be of the view that maybe the stock is nearing a short-term bottom at place, because in generally when you see very high volumes and the stock being extremely volatile, that generally marks in a short-term bottom for the stock. I would just waiting for maybe a confirmation about the 20 DMA. If the stock closes about those levels, that is closer to 345, rather 365 for Coal India. If the stock happens to come back as a closing about 365 plus mark, that could be a strong indication that we could be looking at a short-term bottom and a revival at play for the stock over the near term.
Okay, let's begin winding up for the day. Chakri, great to have you on the show. Kunal, Naresh, we'll see you again tomorrow morning. We're closing in definitely off from the day's lows, off from the day's peak. Closing in pretty quiet for the day. Let me hand it over to Snehi then and getting the close-in trades.
Okay, well, let's take a look at how the markets have panned out in today's trading session. It's been a stellar recovery from the day's lowest point, roughly a 120-point uptick coming in from the day's lowest point. Remember, we were testing that 22,000 mark. 22,004 is where we had reached for the day's lowest point. We've not breached that mark today. Let's see what tomorrow's trading session holds for us. Currently at 22,131. So stellar recovery coming in from the day's lowest point. We're comfortable, at least for now, above the 22,100 mark. Let's pull up the Sensex, and the recovery has been slightly tepid when it comes to Sensex because it's in the red. It's a very slight negative bias coming in, but nonetheless, the Sensex is in the red right now. Let's take a look at what the broader markets are doing, because they were taking it on the chin today. Both your Nifty mid cap and small cap were lower by anywhere between 2.5–3%, but very stellar recovery coming in across the broader markets as well. While the mid-cap has managed to tilt over to the green, the small-cap index continues to languish in the red, but it's been quite the recovery coming in from the day's lowest point for the Nifty small-cap index as well. Let's pull up Nifty Bank and see what that index is up to, because last we saw during midday, at midday, Nifty Bank continued to be in the red. It still is there, a 0.5% cut coming in on Nifty Bank as we speak. The advanced decline ratio is steeply in the favor of the declines today. No surprise there. On the back of that, the India VIX had spiked up quite some bit towards the first half of the trading session, but has cooled off significantly, and in fact now it's a 1.5% cut
coming in on India VIX, and that's a welcome cut. In fact, the only cut that the street would like to see right now. Let's move on and talk about some other newsmakers in today's trading session. Some big movers today. Reliance was heavily under pressure in today's trading session. That stock was trading lower by around 2.5–3%. Continues to be there. Not much improvement over there. It's Bajaj Auto, Coal India, HDFC Bank, Bajaj Finserv, Adani Ports, Maruti Suzuki. These are the ones that were causing some pressure to be maintained on the Nifty. On the flip side, BEL, Grasim, Eicher, JSW Steel, Wipro, Trent. All of these have done pretty well in today's trading session. In fact, while we are talking about Eicher, it's also a couple of other names from the auto pack, the likes of Escorts that have done well on the back of the auto sales number. On the flip side, something like an M&M and Hero, they have been tepid performances this time, a mixed bag coming in. So the auto sector was in focus as well. Sectorally, very quickly, while IT was the only one that was in the green at midday, you have Realty, Metal and Pharma and FMCG along with auto that have tipped over to the green. You have Media, Bank, PSU banks and energy that continues to be in the red. That's how the market construct has shaped up in today's trading session. Let's pull up the Nifty once again. We've ended rather flat, but above the 22,100 mark is where we have shut shop for the day.